Good morning, everyone, and welcome to a new trigonometrics analysis of JP Morgan's stock. As mentioned in the title, before analyzing the potential upward and downward movements of the stock ahead of the earnings release, we need to focus on past events, since this is the first video analysis. So let's start from the low made on July 16, 2021. In which we have had the development of a downward yearly cycle, T plus 5, which has been negative because the low from which it ended was lower compared to the low from which it started. This yearly negative downward cycle has lasted 312 bars or 312 days. 312 days is a duration that is encompassed between 190 and 338 days, and it's close to its maximum duration. We have had subsequently a new yearly or multi-yearly T plus 6, even B yearly downward cycle, divided in the first T plus 5 or yearly positive downward cycle that lasted 261 days. This positive downward yearly cycle allowed it to close what? To close the upward cycle as well. In fact, by using our cycle analysis, we always have to study the upward and downward cycles simultaneously to better understand at which particular point in time the trend is. So in this case, regarding the multi-yearly upward cycles, we had the evidence that on the Friday, 22nd of October 2021, we have at the beginning of wider upward T plus 5 cycle, which is a T plus 6 or a T plus 7. So this first multi-yearly cycle has had a first T plus 5 or 200 days, and then we have had subsequently another T plus 5, which ended on the 28th of July 2023. This second upward yearly cycle, a positive one because the top from which it ended was higher to the top from which it started, lasted 237 days. So having had this particular conditions, now we can focus more on what happened during the 2023. And we will try to address the question, what can we expect before the earnings or even after the earnings? So remember, these are the durations, and let's now gauge time of the upward and downward cycles. So first of all, from this low occurred on the 27th of October 2023, we have had the beginning of a new T plus 5. This T plus 5 or yearly downward cycle has been divided into the first T plus 3 3-month cycles and the second T plus 3 3-month cycle. The sum of these two allowed it to have a T plus 4. A T plus 4 is a 6-month cycle, and the duration, its standard duration is between 94 days to 168 days. In this case, we have had a T plus 4 of a total duration of 117 days. Subsequently, we have had another push back to the upside, and with this candle, we even before, to be honest, with this candle on the 14th of May, we broke up the maximum swing occurred on the 1st of April 2024. Because here we have had the evidence of a new cycle. Now the interesting situation is that given the break with this candle, now this entire cycle has been broken to the upside. Therefore, the extension of the duration of this cycle will be just to the upside. But let's study a little bit better if this is a T plus 3 or T plus 4 and in which structural frame it belongs to. Because we always have to apply the Matryoshka effect. So from this top, we have added a new T plus 5. A T plus 5 is a yearly cycle between 190 and 338 days. Now, the duration here of this T plus 5 has reached, with today's candle, 234 bars. This means that we have already a duration which is close to the median duration to complete a T plus 5. And after the completion of a T plus 5, we expect another T plus 5, with the initial part that will be definitely heading toward the downtrend. But given that this is a median duration, we can also expect to further proceed on the upside. Every time that a cycle is broken to the upside or to the downside, depending of the upward or downward cycle, then the extension of the cycle, if these breaks occurs before a minimum duration, we can always say that the extension of the cycle will be to the upside or to the downside in case of a break of a downward cycle, like in this case. So we have had the break here, and then the extension of the duration of the T plus 5 has been to the downside. Now, the first important point with this analysis is that we have the minimum conditions, or we have already the minimum and sufficient necessary conditions to close at T plus 5. But we have the evidence that here a new cycle was born. Therefore, we need to finish firstly this T plus 3 or T plus 4 before having a retracement for a new T plus 5. Given that the sum of the candles that occur that have been developed lower to this high, to this top, have been 32, we have the possibility to identify this new cycle as a T plus 4. So this T plus 4 or a T plus 4 can last between 94 and 168 days. So potentially we might have the possibility to extend the gains until 168 days. So we have the possibility to extend the gains until November, end of November 2024. But of course, we have also to check whether this is encompassed between the total duration of a nearly downward cycle or upward cycle, which in this case is exactly that, 338 days. And here we have the maximum 168 days. They both end on Friday 29th of November. But this will be the best case scenario. We need to be aware that we might have the possibility to start retracing even before that date. So therefore, the minimum duration of a T plus 4 is 94 days. So we can start to retrace after the 7th of August. But let's also make another important consideration. The other important consideration is the following. And here we go a little bit more, or we analyze more the short-term things. From this top, we have had the evidence of a T plus 2. And here you can see that there is a certain specularity between upward and downward cycles. T plus 3 or T plus 4 with a T plus 4, T plus 2 with a T plus 2, T plus 3 with a T plus 3. So here we have the evidence of a T plus 2. And now we have reached a duration of 31 bars. 31 bars, it's already a median duration of a T plus 2. Now we have to consider that the earning release will happen on the 12th, okay, 12th of July. So the 12th of July, at that time, the T plus 2, if we don't have a considerable retracement to start a new cycle, will be at 37 bars. So at this particular point in time, at the time of the earnings release, given that 44 is the maximum duration, we will have 37 days. We will have, at the time of the earnings release, 15% possibility to keep going up and 84% of possibility to start a retracement. Start a retracement because we will need to close a T plus 3 and starting a new T plus 3, because here we have already a duration of 67 days, and at the time of the earnings we will have 73 days. Also, we will need to start closing a T plus 3. Therefore, we will need at least 7 days in red or 7 days to the downtrend before closing the T plus 3. So at the time of the earnings release, keep in mind that we will have more possibilities or chances to start a retracement rather than keep going up. So the possibilities here are 50% versus 85%. But considering that this is a T plus, it can be also a T plus 4, after this retracement, a new T plus 3 downward cycle will be on the edge. And we will have also to close this T plus 4. So here we will need, or we will have a higher chance to come back to the tops before starting a new T plus 5 and closing, as a consequence, a downward T plus 5. These are considerations in any way that we will do after the earnings release. But for the time being, keep in mind that this is the most, from a statistical perspective, the most likelihood way to proceed in terms of trends. So be aware of this. You have here the numbers to calculate all the statistics. If you want to make also further analysis and consideration on the let's say smaller cycles. So thanks for watching and see you to the next episode.